Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a pretty decent upside move into the 74 area. After that, the market balanced for a bit and then broke down into the 58, testing very close to that previous VPOC at 57.5, and that's where responsive buyers have stepped back in. So in the overnight session, we've seen that the sell side stepped back in at the resistance up near 75, and then responsive buyers stepped in ahead of the previous VPOC at 57.5. So fairly two-sided overnight session here. Our short-term bias continues to be neutral. The larger time frame bias continues to be bullish. We are still seeing a disconnect, at least on the smaller time frames, between the S&P, the Nasdaq, and the Russell. So these markets are still a little bit out of sync here, where Russell is leading to the upside and continues to make new all-time highs, and the other markets are still lagging behind. So if Russell continues to make all-time highs today, and we're not seeing any clear signs of weakness on the S&P or in the real-time momentum situation via the tick, then we know that the bigger picture bias continues to be bullish, and Russell can pull the other markets up, and eventually ES can also head higher into its own all-time high at 85. So heading into the open, we're going to watch and see how the market responds to the 57.5 previous VPOC. We have the overnight low at 58, and then we have an HVN at 2160 and the previous close at 61.5. Now, if the markets are actually going to head higher, then ideally you want to see ES holding above the 2160 HVN and the 61.5 area. The 60 to 61.5 essentially marks the short-term balance high from Friday's session. So if we continue to hold above it, then it tells us that the upside move that we saw in the overnight session is still intact and we can head higher. But if we start breaking below 2160 and below 57.5, then it tells us that the selling that we saw in the overnight session is now starting to really press, and from there we can go and retest the 52.5 to 53 HVN, and then the main support area on the day would be 46 to 49, and that's the area that really needs to hold if this bullish balance that has been developing in the S&P is going to continue to remain intact. So if we break below 46 to 49, that's where the market structure really starts to shift in the favor of sellers. But as long as 46 to 49 is holding, then we know that the market is simply consolidating at higher prices and it can still head higher. So those are our main ideas heading into the open on the downside. On the upside, above 65 to 66.5, we have a naked VPOC at 69.5. That's also the area that really kicked off and accelerated the price action to the downside, so it could be a bit of a hurdle on the way back up. It's not really a major level, and if we take it out, then it just further serves as confirmation that buyers are starting to step back in, and with that bigger picture bias being bullish, then we can start to see some acceleration into the 72.5 to 75.5 initial resistance zone, which marks the overnight high. And then from that area, the next one is 78 to 80.5, and then finally 83 to 85, which marks the all-time high. And beyond that, there is no hard resistance. At that point, it would really just be about the range potential of the day and whether there's still sufficient reward to risk to warrant continue buying. But keep in mind again that the Russell has been making fresh all-time highs. So beyond 85, because there's no resistance, we don't really know where it's going to go or when it's going to stop. It could pause when the range gets exhausted, but that doesn't mean that it has to reverse. It could just continue going. I mean, if you look at the price action over the last few days in the Russell, you can see that as it's been making new all-time highs, there really hasn't been any significant pullback. There have been times where the Russell has paused just to kind of consolidate and catch its breath, but from that point on, it's just been continuing to go higher. So if we do push to a fresh all-time high, it doesn't mean that we have to really put in any decent pullback after that. We could just continue going a bit higher from that point on until the range really gets exhausted. So, right now, our short-term bias, like I said, on the day time frame is going to continue to be neutral, just because all the markets kind of are out of sync here. But the larger time frame bias has been bullish for the last several days, and that continues to be bullish. So anytime we see a decent pullback into support, unless we're seeing just very strong signs of downside momentum or broad market selling, we can expect buyers to be active above 46 to 49. And then on the upside, the resistance zones we just have to be a bit more cautious with, because short setups right now are counter to that larger time frame bias. So those are the main thoughts heading into the open. Let's see if the buy side can continue to be active and whether we can hold above the 60 HVN and the 61.5 gap, and we'll take it from there.